Hey everybody, welcome to the Closing Beat. Happy Tuesday to you. How you doing out there? It's good? Hope all is well. Hey, that concert last night was really good, by the way. If you've never seen or heard of Jacob Collier, he's a little goofball, but it was so cool. So many cool musical moments that were just sort of ad-lib and stuff, even with the audience. So I thought it was a great time. And if you haven't seen him or you get a chance to see him, it'll be a time well spent. Anyways, we are Jazz Wealth, the 66th best financial advisor in all of America, which, you know, it's 66. I get it, but that's pretty high. We're celebrating that, so we like that there, and thank you for all the support, whoever did the surveys and things like that. We do appreciate it. Our Wine and Wealth class last Thursday was the May Financial Focus. Every month we're doing like a financial focus, a couple things I want you to take care of or let me help take care of, or any of us here. And then we talked about sell in May and go away. So if you're interested in that, we'll see. Market-wise, we're kind of hinting at that. Let's go over to the S&P and take a look. So intraday was really more interesting than if you just look at the chart, right? So if I go, well, let's just change this. So if I change this to like a 5-minute, here's the intraday action. All right, a little bit more fascinating than it was yesterday, right? It was basically just a straight flat day. See, over here, nice and solid. Actually, I'm going to go to this. This makes it look a little bit different. So today, a little bit more action in terms of the day's range. Wasn't a wide range day or anything, but if you compare it to the last few days, see how it's just like a gap and go type day where you gap and then that's pretty much what you get. So if you like that stuff, you got a tiny bit more volatility. However, we have ourselves potentially running out of steam. So if you go look at the S&P over here like we do, we've recently broken out of this very consistent and long drawn out uptrend. And since then, the market's trying to find its place. We know that statistically, we're not supposed to just see a rocket ship back to highs. That would almost be a little bit alarming if that happened. And so to have this kind of day that says, look, hey, we're kind of done doing all of this here. Let's take a break. That would be totally expected and fine with that. Or I'd be fine with that. The NASDAQ, same kind of concept. It looks similar here and also running out of steam here today, but that tech-based NASDAQ had 1% day, 1% day, 1% day. That is not normal to be just knocking that kind of stuff all out in one day. So, 3 days in a row. Very normal to see it take a little bit of a break here. I'm totally fine with that. If you look around the market in general, the sort of sensitive, the rate sensitive areas were where all the action was at. So for example, if I go over to utilities, you wouldn't expect them to be market leaders today, but that was a second best performing sector today. It's actually quite on a tear there. And if we look year to date, utilities, let me try something here. So utilities are in third place year to date, up 10.7%. The only two sectors doing better are energy and communication services, and that's because of the recent run up there. Energy's got a little bit more, it gained a whole lot more, so even this pullback is keeping it in second place. Communication services, same thing, and that's just because it didn't pull back as much. But today, anyways, anything rate sensitive seemed to do okay, whether it was a sector or an individual stock or you went down to the small caps. That's kind of where you saw a little bit more interesting of a day. Other areas would be like consumer staples, right? Almost a new high there, not quite a new high, but strong day. Stocks inside of that sector that otherwise haven't been real exciting, a handful of them, but hasn't been real exciting. Today, sort of a broad sector rally there. And then materials, that was your best performing sector, up 1.2%. But to be fair, they were all right there within a fraction of a percent. Real estate even, right? Real estate with a little more action there today. Whereas the broad market, the big names, your NVIDIA and Tesla, look at what happened there, just sort of took the day off. It was like, oh, interest rates, let's go to that. Interest rates are going to be moving a little lower and have been moving lower. Great. Well, that must be a sort of a tailwind for these rate sensitive areas. And so that's all I wanted to point out there. There's not a whole lot to cover here today. I just wanted to point out that the things that were weak today were the things that have been strong. Consumer discretionary, tech in particular, basically taking the day, we're really taking the day off, second worst performing sector there, and energy continuing to pull back just a little bit as we talked about. Now, moving around the rest of the market, I'm actually not going to say a whole lot. This will be pretty short because you don't have much to go on. The Dow up a few points. The NASDAQ literally up a few points. The S&P just up a few points. And then if you go down to the Russell, up a point. At one point was the better performing sector there, but also having that intraday range. So I don't know that there's a lot you can learn from today. I wouldn't make this a day where you would say there'd be lots of adjustments, changes, rebalancing, whatever you're thinking. It's kind of a sit on your hands type day, and we can focus on earnings for that matter. Before we do earnings, do we have a leaderboard?
We do. Yeah, fresh leaderboard today. We got Tony, Hannah, Ryan, Mark, and Greg as your top 5 for today, jazzwealth.com/guess the Dow.
I like seeing the different names. We got a handful of different names there.
Yeah. Yeah, all different names. I don't actually recognize any of them, I don't think. About that time of the year, by the way, where the AC is going to have to start running in the background during the show.
That's fair.
Sorry, guys.
I don't know if you guys know, but Florida gets a little hot. And what you see here is literally in like a warehouse in the back of our office. Come by sometime. And so we turn the air off while we're doing the show. Probably not going to be doing that. We're going to keep one of the air conditions on, just so you know. So there's a little slight hum in the background. Just trying to keep everybody cool. Office hands, we're not outdoor people. Anyways, let's take a look at some stocks in the news. Over here. All right. So one of the more obvious ones today, Disney. If you're looking for stocks that had the bigger move today, we happen to own it, so we don't like to see this pullback. We have a fraction of a percent in Disney, but nonetheless had a little pullback. Actually, it wasn't that bad of earnings. If you look at generally across the board, it was a beat there. The Disney Plus subscribers, that's what missed by about 1% there. The comments from leadership there was the entertainment division is going to be softer in the second quarter. Oh, God, no, that's not what we want to hear. Stock goes down, right? However, they said, we expect streaming to be profitable on a net basis by the fourth quarter. So took a little bit of a look into this. If you look, here is their operating income history here for what they consider their direct-to-consumer segment. If you look up their earnings, you could see the breakdown, parks and entertainment and direct-to-consumer and streaming and all that. And so we have been moving nicely from losing $1 billion+ to actually breaking even, or what you would call just let's just call it break even there. So it's good for them. I thought generally it was a decent earnings report there. And to me, not now, but I think generally, as long as you like this company and stuff, I think that's the kind of pullback where people said, all right, great, Q2 is going to be soft. That just got priced in, right? I don't have to wait a whole quarter to figure out whether investors priced in a softer second quarter. No, it's right there. They did it, down 10%, price adjusted like that. The efficient market theory. Okay, nope, let's type a word that we can actually show on the screen. Coke. Up 17% on, this is the bottler. So this is not Coca-Cola. This is their bottling ticker symbol there. We happen to own it, so we're really excited about that. Very good move here today, 17+%. Earnings were good for them. And the fuel to this fire was the $3.1 billion buyback for them. Fabrinet, they do circuit boards and lasers and sensors and stuff. Hey, fun fact about these guys. One time I went down a wormhole and I was looking these guys up because we own the stock, and I was like, you got to know what you're looking into. So it's probably a year ago. This company is based in the Cayman Islands. They have offices in China. They have an embassy in China, and a place in Silicon Valley as well. Really cool what they do if you're into that sort of thing. But anyways, I just thought it was kind of fun there. They beat across the board. And then what was more interesting about that is all the analysts that cover this stock, they instantly went up on their price targets there, which they had lower price targets. So it's not above the current price, but they're raising their price targets for the next 12 months. More headline type stocks here for you. Tesla, believe it was Bloomberg. Let's just go with Bloomberg. They said the total China shipments down double digits. I think it was close to 20% there. So a little bit of weakness from Tesla here today, which is fine because it kind of shot off like a rocket there. You don't like to see that. Although Tesla does that, you don't care to see a stock just take off like that. Causes too many people to get excited, and all the people that are in here to here want to go ahead and sell. So a little bit of extra volume there. It's just the emotional side of it. So that's why you like a slower, steady rally. A little bit more like Embraer. They reported earnings as well. I bring this up because we talked about it the other day where Embraer was like, yeah, maybe we'll make planes like Boeing and Airbus do, because we already make smaller planes. Maybe we can make bigger planes too, at least one of them, maybe. They do make a bigger military airplane, but maybe we'll get into that commercial space there for the wide body, not the narrow jets like they do. Anyways, they reported earnings, lost less than expected. It couldn't be better timing for them if you think about it. If you're a company who has been reported to be out there searching for suppliers, searching for maybe some investment so you can explore this opportunity, you want to show earnings better than everybody was thinking. So lost a little bit less than expected there. And they already reported their sales figures, because remember that came out the other day. So total sales up 1% for them. So wasn't that clever timing on their part? All right, Ferrari, ticker symbol RACE. Yeah, Ferrari's a public company there. Not the best. What sticks out to me, and I'm going to guess what stuck out to everybody else, Taiwan, Hong Kong, China, we have total deliveries down 20%. So not the best of showings for them. And then Spirit Aerosystems here. This was largely telegraphed. I don't think anybody would have not known this, but they lost a whole lot more than expected. I took a few notes from the earnings there. They said the 737 mess with Boeing means that we have lower deliveries, higher cost of goods, higher inventories, slower production, and a higher fixed cost. So they said, well, that's going to mean significant reductions in our projected revenue and cash flow this year. All right. Kind of like, duh. We see that. You watch the news for 10 seconds, you kind of see what's going on there. Remember, they are discussing potential merger with Boeing, and that was asked about that, or they were asked about that numerous times, and all they really did was say, that it's ongoing. Our discussions are ongoing. That's all you need to know. So be it. That's what it is. There was a lot of other stocks in the news as well. Nothing that you would focus too much on. Plantair, if you like that. They're killing it here in the U.S. International was a little bit weaker. I didn't catch where they finished. It was down a little bit on the day. They got the new, like $160 million contract from the government to build some hardware. So it's okay. I mean, that's a volatile stock. I don't know if anybody has questions on that. But tomorrow, what we have earnings-wise, you got Anthem reporting. Teva Pharmaceutical, Uber will get the attention in the morning. Airbnb will get the attention in the afternoon, as well as maybe Cheesecake Factory, just because it tends to be a little more volatile. Airbnb, by the way, is the worst out of all of them. Here. So Airbnb, actually they tie for the worst. Airbnb down 6 of the last 8 earnings reports, meaning they report earnings, the next day stock is down. Boop, there's an example. Oh, there's an example. And then let's take a look at Uber, and I'll take your questions here. So Uber, 60% of the time they beat on earnings. 6 of the last 8, they've actually been up on earnings. So are you a contrarian? You guys think kind of like I do? Maybe. I do. I don't know. My thing. So many buybacks lately, Johan says. Yes, and Mr. Biden, President Biden, is trying to push now 4% surcharge on buybacks. So, yeah, because the one didn't work. Yeah. No one should make planes like Boeing. You don't think like I get it. It's a lot of drama and stuff, but you don't think like generally 80% of it's going okay? 70%, I don't know. Boeing is busy with whistleblowers. I did look that up. I don't know why that's not talked about. It just seems like something they'd make a show out of or something, and we'd all be like, what? No. Oh. DIYer girl, which ticker symbol or futures are analysts referring to when they say bond yields are up or down? Which ticker symbol? Well, most of the time people are looking at the futures. So you got the long bond and the short bond that you could just use the futures market. That's what I use. It's /ZB on the platform here we're using, but it's sometimes $ and then ZB. It just depends on the platform's code. The appropriate ticker is /ZB, and then the short note is ZN. So if you care to look at that, and that's the price. So you're seeing the price movement there. Yeah. Hey, Dustin, you coming to DCI Encore in Utah, July 10th. I don't believe Utah is on the list. We do have California, Texas, Pennsylvania, Michigan, Illinois, definitely North Carolina. Love North Carolina there, the Winston-Salem show. We have Georgia, Alabama, and I think Oregon or Washington. Why? Is that a good show? Should I be out there? What you think? Hedging against French and Ukraine or airport chaos in UK today. No. Took an entry 3-1 here on PayPal. Oh, I see. I love that. I love the way you said that. Okay. Hey, there we go. We got to focus on risk to reward. That's it. That's the name of the game. So we don't have to talk about that. But if you take a position, what's the risk? Where will you stop? And where will you take your reward? Plan that out ahead of time. It's easy to do. It just, sadly, most people don't. 65.90, and you're shooting for 71. So risk to, okay, so you're holding tight on that. One, you got a tight little stop. Not that that's bad. I'm just saying, tight stop. With the dollar getting stronger again, I saw that across the board. How long until that affects mega cap tech? That's a good question. That's a good question there. Specifically what that impact is or when that inverse correlation takes place, I wonder if there's a way. There's a way, but is that interesting? How to figure out how much stress they can take before it starts to impact them? Actually, I think I know of a study to look at for you, so I might have some slides for that. They won't be mine. I'll tell you whoever has them, but check that out. Thoughts on Johnson & Johnson? What do you mean? All right, Johnson & Johnson. So if you're I don't know if you own it or whatever, but if you're, as a buyer, give me a reason. Like, what are we doing? Are we calling that a high or low? Is that what you're interested in there? Maybe shifting of the trend there? And if so, if this is the shifting of the trend, what do you got? $4 to make? Which I don't know that that's interesting to you or not. Risk to reward, what we were just talking about there. Feels like about a 1.5 to 1 risk to reward on that. Yeah. The wife and I are going to see a DCI Encore in Utah about 30 minutes. Oh, that's awesome. Hey, any shows you guys are going to, man, send me some pictures and a video. We're actually going to be going out to those various shows and interviewing the core members, the directors, parents, staff, just, general fans, asking financial questions for prizes. And then what we're going to do is the best answers we get from the kids and everything, we're going to make that our commercial at finals, because they gave us 3 commercials at the various stadiums and stuff. And so instead of just going, look at us, Jazz Wealth, we're going to be like, hey, take a look, have some fun, watch these kids answer some questions. So it'll be kind of a fun way to interact with them. Yeah. Tomorrow, would you mind sharing the updated data on Apple events in the days? Yeah, we could do that. I know that's a popular one with their developer conferences and their product launches and stuff. Yep, we can do that. Yep. Are you a fan of the VWAP when trading? No, it doesn't work as much anymore. I'll tell you why. It's the covered call ETFs that jacked that all up, especially in the last 10 minutes of the day. So what happens there is you buy, these covered call ETFs are phenomenally popular right now, like $600 billion in just like the last 2 years. So what happens there is you buy one of those and they have to adjust their positions. Well, they don't usually adjust their positions till later in the day. So volume to them doesn't mean anything. They have to take action. Well, because now there's such a big giant elephant hopping into the bathtub, you're finding, I don't know if you're finding, but you're finding that those areas that you're looking at all of a sudden are a little looser. They're not so sticky like they used to be 10 years ago or so. And that's literally their fault. Thought about doing a video on that and getting into the woods, but I think it's a little off topic. Yeah. Who's a better stock picker, Jim Cramer or Dustin? I'm not a stock picker, so I won't give you that one. However, I won't discount Jim Cramer. I know people give him a hard time. He's got like a 54% batting average, but that's better than the market. So technically his picks are better than the market. The reward may not be. We could talk about that. But technically he picks better than what the market does, even though it doesn't seem like a large difference. I don't know how to say it. So I like when people are like, oh, Jim Cramer guy sucks. I'm like, technically he doesn't, but not much better than the market over the long run. What it is. There you go. See, me and Jimmy, we could be buddies. Come on the show, bud. Actually, don't come on the show. I can't handle that guy. It just wouldn't work. We can't be friends. I'm sorry. All right. Anything else? I've covered everything for the day. Like I said, I didn't want to say a whole lot today because it's not one of those days where we're getting a whole lot of information. There's not much to take you into tomorrow and go, that's what I'm going to do. So you kind of got to sit on your hands. This is where you can test your patience there. So I love it. Enjoy the rest of your day or evening. We will see you tomorrow.
When you wish upon a star, makes no difference who you are.